Holy shimoles. What's up, boys and girls? Oh, look at this. Oh my. Does that have a green background on the text? I put the chat. Wait, should I come over here? Let's get it. Temporary condition. I'll put this chat here. Look at this. Can I make it compact? What a title. Dude, maybe I'll change the title. I mean, the title is the title. I don't know what to tell you guys. But yeah, this is the intro is money. What's up, Charles? We got Graham in the house today. Connie is out. Prayers to her. I think she had some quick family emergency. Everything is good as far as I understand. Or at least, you know, she's a big help. So she will be missed today. But we do have backup. Graham should be here. This is our boy right there. I think he's going to text me something, a screenshot, because I don't always remember. Oh. Okay. I'm going to try something. I think. What? Yeah. I don't see it. Interesting. That's funny. Yeah, so that button is not there for me. Well, that was for... I'm on a tangent. This is what happens when I try to do something live. All good. Listen, did we bottom? I don't know. Was this morning wild? Absolutely. Doc is pinned. The chat is going crazy. What's up with the title? I mean, I had to get everybody in somehow. Had to get them in somehow. Okay, later. I'm in a browser. But if I did that, I think I would have echo. My boy's trying to get me to figure out how to run a poll, and I just don't have the options. Regardless, you know, it's a wild morning. It was crazy because we opened up super high. I was looking at the pre-market. I'd sold some put spreads on Amazon Friday, which ended up being a perfectly fine trade. And I'm like, all right, well, they're gonna report this week. We'll close it quickly. No big deal. Dude, the flipping happened so fast. So fast. Is space sector at a bottom? I was actually thinking about this too, because I was like, looking at the headlines. Hello, this is got to be like where you load up. I don't have the full because I was dual streaming this morning, so hopefully you guys caught some of that. I don't have the full like headline release that I usually do, but yeah, that we were gonna go into Iran or whatever, and then we pulled out because we don't have enough ammunition or enough missiles, if you will. So that, like, just my basic thought out of the gate is like, oh, that's probably when you want to buy, right? Like, okay, it'll build up, but I don't know if it's gonna bottom or not. I think looking at the market right now, this is a little sketch. So the good news is that it might be over very quickly. This setup right now looks like just clearly a knee-jerk reaction, but overall, it's a combination of the headlines and the macro. Now, last week we had like no macro ahead of us. This week, so not the case. This week, not even kind of the case. I'll do my slideshow here. I didn't update the main one, but yeah. China shock for sure. Sketch is fun. You know, a day like today just reminded me of how much like being a trader can benefit you. Like early quick moves, a day trader could have made a ton I mean, a ton of cash, like massive ROI going short right when the market flipped. And then as an investor, you can just kind of take that money and reinvest it. And that's how you would compound. Honestly, that's like the idea of the apprenticeship itself. But anyways, that's what we have. I didn't update this slide, but I did update this slide. So I'm just skipping ahead. Aside from that, you know, the biggest headlines to me were one, early pre-market. I think is the Nvidia data center going with partnership with OpenAI, which is bullish for CapEx. And then at the same time, we instantly have this China, stop, I'm going to turn off my Discord. We instantly have this China kind of like headline come in, new memory chip opening up. It's like 500% out of the gate. Micron, SK Hynix, DRAM's it's all immediately reversing. ASML, I was looking at this, I'm like, oh my God. And then we have another headline that comes out and it's like, not only are they coming after like ramping the memory market, it's like the advanced packaging and everything that goes around that too. So it's like the AI trade across the board starts deflating on a knee-jerk reaction with a combination of multiple headlines setting up a killer intraday reversal, like just gut-wrenching intraday reversal for anybody that looked at their phone or their accounts early and then came back to see like blood red. All of a sudden you're like, what the actual happened? Dude, I can relate. It's yeah, it's wild, but I think it's a knee-jerk reaction. A lot of profits being taken. The market's running into probably a very pivotal point where maybe we're about to have FOMC this week. This is Wednesday. We have PCE, GDP coming on Thursday right behind it. We're peaking on from an earnings perspective. I think we have Amazon and somebody else later on. Actually, I'll get to that slide in a sec, but we still have some of the Mag 7s to go through. The Google reaction was not great. At least the initial reaction was not great. Today it's recovering slightly, but dude, Google, what was Google? Intraday, from the moment that they reported, I think high to the very following day's low, Google, a multi-trillion-dollar market cap company, a 10% swing from overnight to the following close, like 10%. Like, dude, that's on a $4 trillion company. That's a lot. That's a little too much. Tesla just absolutely getting bled out, still at the lows, just about 300 right now. Looks like it got nearly 304 this morning. I mean, yeah, there's going to be some hesitations. GLW, Qualcomm, these haven't reported yet. So I think the purpose of me bringing those up, and I'm not sharing the charts, is that, listen, it's apprehension. People are scared. As our buddy Matt Money would say, it's a bunch of shook babies, if you will. And my conversation with my buddy Steve this morning was that, you know, a lot of things have run really far, really fast. And this is probably a moment in the market where, yeah, everybody's fearful that some pull forward has taken place in terms of valuation of some companies. But depending on your time horizon, if you have the right time horizon, like 3 to 5+ years, I mean, things are going to work out just fine. And this is all just a bunch of noise. Honestly, if you zoom out far enough and you're further enough in the future, you probably won't even notice this point in the chart. But near term, if you're refreshing your brokerage like every 5 minutes, yeah, you're going to freak out. So two different mindsets here. Near term, is it over? Probably not, quite frankly. Probably not over yet. And it can't be over because we haven't gotten through all of earnings season. The good news there is that there are still a lot of companies in the AI space, in the AI trade, where the valuations might have seemed really stretched, but they report earnings and things end up not being as stretched as they, you know, the market might have thought. And boom, you have instant reactions to the upside. We're going to have that again, right? But guessing which ones those are ahead of time, honestly, it's kind of a crapshoot. What I can say is that in the meantime, you definitely want to be quality, stay with quality companies. Even ASML today, their earnings report was amazing, but 10% intraday drawdown from pre-market high to the last time I checked the intraday lows. That is insane. That's a lot, is what it is. And it's not a question of whether or not the company is good. I think that's a perfect example of this is just clearly a great company that happens to be trading at the high end of its historical multiple. And, there's no real risk priced in at that point. So all of a sudden, the market starts to price in a little bit of a risk, which discounts the premium. And that's what we get. June, Russell might as well say Mag 7. I mean, that's what Russell's asking for. Russell's like, I don't know what he's doing. He's shotgunning his request. So today, yes, we'll go over some of the welcome, by the way. If you're new to the stream, I should have kicked off with this, but thank you for joining. Like the show, subscribe to the channel if you haven't. But we do this every Monday, and every Monday, really what we're doing is taking a look at what's going to drive our money this week, very short term. Where can we make some money potentially? We'll take a look at some trades. So if you guys are familiar with any of the other shows that we do, we will have a moment to take some requests. It can't be too long today, but we will definitely take some requests. And where do you want to focus? So what I will say is that tech right now is looking the worst before we even look at a chart. And I think if you get some oversold movement, we might get some oversold bounces, but from there, we'll have to see what happens. And nothing can really recover until we're through the majority of earnings. It's just not possible. But in the meantime, here's the deal. Wednesday, FOMC. This is the biggest day of the week right here. FOMC is I think his second FOMC. Anyways, this is the market moving event, followed by a secondary market moving event, one in PCE and also in GDP. These come out in the pre-market. And I think we have peak earnings that day. So look, I'll just say right now, this movement is a combination of headlines that were initially bullish that instantly flipped to bearish, with the realization that, oh crap, we have some major economic stuff right in front of us this week. Let me maybe deleverage a little bit. Let me right size my positions a little bit before maybe crap hits the fan. I don't even know if I can curse on here, but I have the thing. Yeah, before hits the fan, let me make sure I'm not too much at risk. So that's all I'm seeing in the market. But until then, we'll have to see, and that's not until those companies report earnings. So over to earnings. Appreciate your super chat, my dude. Saw that. Somehow it disappears on. Oh, there's. We will get you, Swati. We will always do SPY and QQ ahead of time. I was trying to figure out what you meant by volume analysis. June, HODL. Look at these guys back to back. Yeah, it's HODL. My point is that anything can happen between now and Thursday, but none of it's going to be real until we get past earnings. Like, it might be a dip. The dip might get deeper after earnings. It might completely recover after earnings. But to guess which one that's going to be now, I'm just telling you, it's technically a guess. At the index level, we'll have to see. But look at this. Microsoft, Meta, Robinhood, Wednesday night. So this is after the close. And then Thursday, after those, Apple, Amazon, maybe Reddit. Coin is like, I don't really care about coin. KLA tomorrow night. Amkor tonight. Oh, crap. I own Cadence. Cadence tonight. Celestica. Oh, man. Look at this. This is peak earnings, right? This is about to get crazy. AZN. I didn't even look at AZN. What's AZN? AstraZeneca. Oh, that's biotech. All right, whatever. But Applied Digital, Navitas, Celestica, Cadence. This is it, right? Amkor, Nucor, Rambus, F5. By the way, F5, just going to say this right now. Let me look at the chart. I think this could be an example. If you don't know what F5 is, this chart is towards the highs. This could be an example of one that maybe looks a little hot, has come down, but most people have no idea what this stock is. Let's see, what is this? From the highs, which is not even that long ago, it's down. Oh, it's not even down that much. Okay, this is a load balancing company. This is AI trade that you don't know. What do you think about the chart? Chart's not too bad, huh? I'm just going to say this. I think even companies like this might do okay. I'm not saying take a trade one way or the other. I'm definitely not saying that. I'm just saying, if you didn't know, it's a thing. Nucor, this is the steel super cycle. My Cleveland Cliffs did good, up like 20% from the lows. We'll see. I'm going to trail out on that for right now. Oh, God. Even Boeing in the morning. Corning pre-market. This one's come down significantly. Still expensive, but I mean, I think probably worth it. Bloom. This is Bloom. I think that's Bloom Energy. Seagate. Holy crap, guys. Teradyne. You remember what NXPI did last quarter? This is a big week. I'm just going to say that. This is like the biggest week. To call a direction one way or the other that is a sustained move, dude, you can't do that and not understand that you're like guessing. Like you're definitively guessing. Amphenol, no, that's different. Yeah, some of these healthcare companies I don't really care about. Microsoft, Meta, I mean, these guys, and then the secondary tier, ARM. Hoodie's going to do well. I don't know if it holds the move. Qualcomm, kind of a gamble. Dude, look at this. KLA followed by Lam Research, the two bigs in the test and measurement metrology space. This is IoT right here, NXPI, by the way. Enphase is going to tell you whether or not they actually got any deals. I don't think they did on their new behind the meter energy offering. And then Thursday, it's pretty mellow for the AI trade. I would say decidedly this is not in the AI trade. I think the reason I sold some aggressive put credit spreads on Amazon is because of what's coming and where we're coming off of. So look at the type of companies reporting before Amazon. We're going to find out. My Rivi has to report this week. She's had a roller coaster of a ride. Not too bad right now. Guys, Eaton, this is another AI trade. Well, it's energy, but it's the AI kind of like mega. Yeah, this is a crazy week. So not only do we have, you didn't see that. Not only do we have FOMC, PCE, and GDP, we have one hell of an earnings season to get through. I mean, that's just going to be insane. That's going to be absolutely insane. I'm looking at NXPI right now, and I'm thinking about their last quarter. They just absolutely crushed it. So I'm like, I'm kind of itching. So like, dude, anything can happen. Anything can happen. Just taking stock, yeah. KB, there's just so much going on. So much going on. No, don't read into this at all. Now up 8%. So is Microsoft. So also, when you look across the board, what do you see? You see the AI trade like getting decimated. You see Nvidia down for nearly no reason. I haven't looked at the chart since I started this stream. honestly, without looking at a chart, my gut says that we're already recovering. I don't know what that means if we're actually, that's how you know it's a raw reaction or a real guess, because I really haven't looked at the chart. But yeah, oh shoot, Quanta Services, PWR, that's a big one. Guys, so much. Souls, I mean, yeah. I'm in Lowe's and Walmart calls. I mean, as long as they don't report, if you report, you're gambling. But yeah, that's my point, is that you don't really know. So like when we get to moments like this, I'll just say these are the moments where why my sentiment was like, dude, what a time to be a trader. Oh my goodness. Because I know that whatever I'm looking at on the screen is basically fake. Like it's just a knee-jerk reaction that cannot be solidified until we actually get through earnings. And this is a setup where trying to be an investor, or let's say position trader rather, is tough, and you don't know when the dip is going to stop dipping. So we typically lean on technicals for that. We call it TA. Some people that don't believe in TA call it, male astrology. And to that end, it's not male astrology. That there's something called astronomy, which is more like guessing. And, is there a crystal ball? No, I don't think there's a crystal ball. But some people think there is. And so I went out and I found a person that believes there's a crystal ball. I don't, but you've seen it. And so there's another T for TA, which obviously stands for tarot. And if you're not familiar with this part of the show, it is for comedic relief. We've dubbed my friend Miss Cleo. If you don't know who that is, look them up. But this is for the people that call technical analysis male astrology, because no, it is not. If you think there's something like that, it has nothing to do with looking at charts. And don't confuse the two, because I'll show you what real astrology looks like in the market. So without further ado, I will show you right now. Here we go. So it's time for maybe your favorite, maybe your least favorite, what do you call this? Part of the show. But this is what that looks like. This does not look like a chart. I mean, sometimes she does good. Sometimes she flunks. Who knows? But let's see what she has to say today. So today, the way this works is they give us a theme card for the week, goes on the top, and then every day of the week, we get a card. So I have no idea what to think about this. I have no idea if this is good or bad. This is called the Star. I literally have never seen this before. I've literally never seen this card before, so I have no idea what to say. Then we have wands, which are like little beat sticks. And so all I can tell you is that whenever the beat sticks come out, a beating is about to ensue. I would say that she probably nailed this one today. There's a little bit of a beating. The moon, I mean, there's a lobster. So whatever lobsters mean for the market, that's what this is. And then two wolves. This is probably, these two wolves for a trader probably represent the good trader and the bad trader in you, right? One trader says you're a trader. The other trader says you're a trader, and it's just never your fault. One of the two is right. I don't know, but that's what I'm looking at, the wolves. So I think this means flip a coin. I don't know. Then there's a sword. Okay, so there's a 5 of swords. So there's a guy in the background, or girl. This person seems to be crying. This person's towel seems to be covered in blood. So it seems to me that a battle has ensued, and I don't know why this guy's smiling, but he's either a dick or like what is he smiling about? I don't know. I really couldn't tell you. But the battle, I believe, is over. I believe the battle is over. And then the spinning wheel shows up. So we spin the wheel and you get a prize. And whatever the prize is likely random. That's how I'm reading this. What do you guys, do you think I'm doing okay right now? I actually think I'm doing a pretty good job. Spin the wheel and a random result ensues, and maybe it's crazy. Maybe you won the lottery. I don't know, but whatever it is, you were just lucky. That's what this card says to me. And then there's a party after. So, you know, I think this is a party or a dance. Who knows? There's even an old guy down here who seems to, what is he doing? He just seems to be feeding the dogs. But there's a child. Yeah, I don't know. There's a party. Maybe the coins are your entrance fee, and it costs a lot of money to be there. But that's what this is. Yeah, all clear. We dumb, he says. Who knows? Who knows? You know what? I don't know. That's my take on this. But here's the actual person that makes this is the expert reading, right? So again, comedic relief only. So the theme card, this is what she says. The star appears to offer hope and healing during times of difficulty. Well, this morning's definitely time of difficulty. Does hope and healing show up? I don't know. It brings more red days than green. Okay. But has a history of a flat close as a weekly card. Interesting. Right? When it trends, it's usually to the downside. The good news is that it tends to set up a quick recovery. All right. All right. There we are. Quick recovery, bad week. That's kind of like what I thought. Like, what's up, Rach? Like, what I'm saying is that, look, anything can happen between now and Thursday. And by Thursday, it could all be basically a bad dream, honestly. But does it actually recover after that? We have to see. We don't know. Rapid impulse price action. Nailed it, right? We'll see some more movement than usual. Nailed it. Perhaps a peppy overnight leading to a gap open. Nailed it. However, most of the travel would be back and forth rather than directional. So look to trade flat look to trade for a flat day. All right. I think hopefully maybe we got that. Tuesday, do we go to the moon? I don't know, but this is the moon. The moon has a green bias. So Miss Cleo at least is calling for a turnaround Tuesday and can close anywhere between, wow. Guys, like what is this? Between 0.25 and 1.5% on SPY. All right. So it could be a mediocre day or a good day, one of the two, but maybe green. It rarely trends red. So the worst you can expect is a close just under the flat. And I was kind of thinking, funny enough, Miss Cleo, that I might sell some another lot of puts at the close today. Who knows? If a green trend appears, then you can chase it. Cool. Wednesday, 5 of Swords. This card says the moon sets a trap. Is this why the dogs were howling, right? And Wednesday springs it. What was Wednesday? It was the sword guy. Oh yeah, this is the snarky looking dude with other people having bled out and one walking away crying, right? This card may be tricky to play though because it can also manifest traps throughout the day. So I would get in on the trade Tuesday at close rather than Wednesday morning. I don't understand why. What are you talking about? What does that even mean, Miss Cleo? This is what I'm saying. I don't know. Thursday, Wheel of Fortune. Look for a mean reversion again with energy equal to the prior day, equal to Wednesday. So Chop Fest. I would also look for quite a bit of back and forth throughout the session. Trend is very possible. If you chase it, try to get in on a swing, which means overnight or multiple nights. I don't know. It means trend is what it should mean. I don't know if she defines it that way, but I don't know. I was thinking it would be the Wheel of Fortune, literal definition. I think I might be right. Anyways, 10 of Pentacles for Friday. I feel like a broken record, but look out for mean reversion again with equal energy to the prior day again. Trend is very likely again, so don't be afraid to chase it. Oh, so her swing was literally just overnight and then close in the morning. Buy the close in the morning. That's fine. We're much less likely to get a midday swing today than yesterday. This is a tough week. She does do crypto. We're dealt with a week of mean reversion, but unlike crypto, there's a lot of trend in play. Wow. One and done. Hey, like literally, this is what I said to the server this morning. I was like, if you caught this trade, it was so epic from a day trading perspective. Dude, take the rest of the month off. Get out of here, right? You should not care because good night, you probably cleaned house. And yeah, don't risk it. You already got the biscuit. See you later, bye. And it's all good. As Nick says, new lows incoming. Shells, I don't know. Why would it stop at 50K? Why would it stop at 50K? I thought it was 38 or something like that. Today is flying. All gains lost. Friday's comeback. You know, in the school of gain, in the school, we actually teach how to see this. But I will tell you that out of the gate this morning, I took one look at it and it was like, this is going to be one of those what they call bearish engulfing days. That's just what it was going to be. Looking at price action out of the gate, it was like, yeah, this is going to be one of those bearish engulfing days that opens up big green and quickly goes big red. And, you know, I think a new trader would be stuck wondering why did this happen, when the technical people could be like, yeah, well, at this point, you know, the market did this and then we saw this. And then because of this, it then does this. And when this happens, that happens. And when that happens, this happens. And therefore bearish engulfing. So if you want to learn that stuff, we have to teach it in class because there's way too much to actually unpack there in a single session. But anyways, I hear there's a ticker request thing. Oh my goodness. Yeah. And you guys are already hot in it. Oh, okay. That's right. Our boys got some volume analysis requests on SPY. So this is my first view every morning when I come in. I like to use a 30-minute chart. I kind of know where we are. Qs is the one that's going to be probably the biggest at risk, and that's what I said at the beginning. These white lines, these white horizontal lines, are our NFP levels, which if you're not familiar with, we use quite a bit. You know, the fundamentalists, if you will, would take one look at this and be like, look, oil's down a significant amount, like 10%. Why is the stock market not up? Well, we just kind of explained why, because of all the other things that are kind of counteracting. Good news is that not everything is going completely green. The bad news is that the Dixie, which is the dollar, this in near term technically kind of represents a flight to cash. I do see it, but it's not like it is here. It is not massive. But again, I think you could kind of just chill for a little bit. There's no reason to make any large decisions in terms of dip buying. I don't think this is the dip to buy. So I would say just chill. Because if we do break down, there will be a dip to buy. And just so you know, I'll take one look at this. This is QQQ. From an NFP perspective and trend perspective, look, this is in essence, you know, the saying, it was funny. It was like, historically, the saying is stairs up and then elevator down. But this has been elevator up and really like stare down so far. I think my point is that if we're about to actually break down, this is where the elevator down would potentially happen. Although today, I don't know, I wouldn't chase it either. So from an intraday perspective, that puts support realistically on QQQ. I'm not going to say 650. And I do understand that 650 is from this swing low to this extreme high. And technically, this is a 50% retracement. I do not think that that's going to, if this really breaks down, I don't think that's going to hold nothing up. Like literally nothing. I think you actually land somewhere closer to 620s in that case, which yes, from here represents like another 10%. And in that instance, we would probably be, look, right now, the truth is that we're already 10% from the highs. Once we're at 15% from the highs, which is 635, and that's when everybody comes out and says, hey, there's a bearish, we're in a bear market. Usually when the CNBC screen starts flashing bear market, that's usually a time to buy. And so for those reasons, like I would be more bullish down there, and I would love to have an opportunity around 630, 620 on Qs. Where does that put your individual stocks? That could put them significantly lower. So that is the caution. That is the situation as it is right now. We are in what's called an active breakdown today for tech. It's just what's true. Can we pop up? And I would caution most of this with, like, I wouldn't chase the downside today, but I would say, hey, look, what did I do? Quick look at my left. This is my left, my screen. Oh, my screen. You want me to share the screen? I mean, do you really need to see it? Can't you just go with whatever I was saying? Fine. We'll show the screen. How's that? I'm just gonna start over on the Qs. I'm not gonna go backwards. But what I was saying, anyways, was that, look, this is we are like 10% off the highs, and you know what? It's just not super bearish. 15. I'm saying that's this 651 is where people would probably come out of the weeds and they'll say, hey, look, this is here from extreme low to extreme high on this big move. And this is what I was talking about. It's like elevator up, and like we've kind of taken the stairs down. Can we take the stair down and then the escalator or elevator down from here? That's what's happening, right? We do have an active breakdown on tech. We have 1, 2, 3 days below here, 699. This kind of solidifies that. I don't think you should chase it, but again, because like if this is stairs down, just so you know, stairs down, elevator down, this kind of sets up where like it's possible we actually come back up, retest this just enough for everybody to think that we're out of the weeds, because that's probably going to be a big bounce, right? Right before we go back down to the gulag. So no, I don't think you need to chase this to the downside. And if it does pop, I'm decidedly saying, dude, who gave me a $20 share my screen chat? Or is that just Graham just messing with me? That is totally Graham messing with me. No, it's not. Mark, my guy. This is the one. He got me. Anyways, that was funny. Who says we don't have fun on this stream anyways? Like, what's that about? It's funny. All I'm saying is relax. Don't buy this dip. Just wait a little bit. Don't get excited. Don't get like, oh, we're going all the way back. No, we have to be well over 711. We have to be. So just know that this from the tech perspective, all of this was support completely broken. It is now going to act as resistance. So when this happens, my point is that you can come back up, retest this. It might chop all the way through, but until we're up through 711, like the convenience store, we're not over resistance. Like all that prior support is now likely going to act as future resistance. So we can pop up. And my caution is that there might be some people waiting to sell on you. So don't get overly excited here. the discounted technical area is down here below 629, below 627, closer to 620, as close to 620 as I can get on Qs. Honestly, that's a good technical spot for a basic and very normal retracement. This is, I just put our SMAs on. This is just this, that's going to be just slightly below the 200-day simple moving average. For my boy that was asking about the volume analysis, I don't do volume analysis the way that most people do it. What I do is I use this volume profile here. And so what this looks like, and we go through this in the school, is that on the right-hand side, this represents volume at price. So the amount of trades, like the amount of volume that was traded at this price and the amount of volume that was traded at this price. Now, super simple. Think about this. I'll make this a little bit bigger. Think about this like a mountain range. So that's a little bit bigger here. What you're looking at is essentially, you know, us price traveling from this mountain peak to this mountain peak, right? Mount Vesuvius to Mount, I don't know, Kilimanjaro is usually what I say. And these are like, there's little cities at the top of each mountain peak. This one happens to have two cities, one city here, one city here. But this is, we're traveling from point A. Let's go, red. From point A to point B. That's what's happening. In this instance, this right here, this area is called, these are called high volume nodes is what they're called. This is a low volume area. And as a trader, what you're really looking for is you're looking for these low volume pockets, because what they tell you is where price is going to traverse very quickly. And so what I'm telling you is that based on just a volume analysis, we have actually lost support already, and we're likely traveling down to this area low. But in order for that to really solidify, we have to get through earnings. From a price perspective, it's not going to be until we're actually over this area, which is kind of my 7-11 type number, that we can say, hey, look, we're actually out of the weeds. And if that's the case, cool. But as it sits right now, and I'm just reporting, she don't look good. She don't look so hot. And in fact, this looks like the worst has not happened yet. SPY is very similar. So again, volume analysis here, I can throw on my NFP levels. SPY is not actually broken yet, but the level to watch on SPY is 735. Actually, it's like 734. At this point, I think we're very close to it. Yeah, 734, spot 29. So I'm not going to get a full-blown trigger today on SPY, but Q's is, it's pretty decidedly so. And then when I take these off and you just look at the chart again, doing the same kind of volume analysis from a time at price perspective, look, we're going from point A to point B. And inside of this trajectory here, there's a very low volume profile, low volume valley, where price can potentially accelerate significantly. That's usually what happens. And support then becomes closer to 699 in that case, which, yep, from here, technically that's another 6% down. Where would that put SPY from a total perspective? Put about 10% down. That it just kind of is what it is. There's a small little pit stop along the way. Looks like around 710. It's possible, but like I said, this is not a discounted spot at the index level to make a purchase. Nobody saw this face ripping rally from when we started the year. I didn't have this in the cards. And just zooming back, just to show you, we were in a situation that wasn't so different to begin the year. And my point here is that this is coming into March. If I were to turn that volume profile on, looks like I can't, but I'll just zoom out. It looked very similar looking back, right? So coming down here, and this is my caution. We're like, yeah, it looks bad. If I make this call right here, right now, this is nearly the same thing as making the call right here on SPY, where, you know, like I'm saying, I would not chase this short. I would not sell anything. I would wait. And I think that what you actually do, and the same thing was true on Qs, is that you wait to see, when we come up and retest this, which usually does happen, one of two things happens. One, this would come back down and we would then see the low, which means that the point in time which you actually want to react is going to be comparative to you're going to be able to zoom out, look left, and we're going to find a spot that's essentially just like this. I kind of already showed you where it was, but we'll do it again. When that comes, one of two things happens. Either this can start to get back up through, and this is going to be like the equivalent of your 7-Eleven on Qs, and then you know that you're in the clear, or the latter, right? And this comes down, and you have this big kind of dumpster fire. One of the two could have happened. The setup is about to appear, and what I'll say right now on SPY is that it actually hasn't broken just yet. Qs has, but the times that you kind of chase this, it's like, no, the shorts to me, I think look more like day trading. And this was, I'll just back it up a little bit just to show you what it was on Qs at the beginning of the year. Look, it was very similar. So we had a same kind of situation from a volume profile, right here, and the spot at which realistically, I think it was, you have this consolidation here, that when you actually come back in and retest, so here's your levels. So you have these two levels here, and here's your volume profile right across here. We're looking at a situation where we're probably right about here. Usually we'll come back up. We might end up retesting. At that point, it's up for debate, right? Which one happens? Do we get this, or do we continue to push through resistance? And right here, look at whoosh. This is the volume profile. This is the volume analysis. It's like, if you can get through that same level, look, it was just kind of a bad dream. I think a similar situation. This fundamentally had its own thing going on for it, but technically, if that had broken down at that point in time, you were looking at a movement into these type of areas. Didn't quite get there. You got maybe halfway there. Qs is like, what do we say? Maybe if I go to a daily chart, we are maybe on this candle right now. So yeah, there could be a couple more days of downside. I don't want to like really overstep. That's like Tuesday, Wednesday, and then Thursday, the Wheel of Fortune comes. Who knows? Yeah, just chill. And these small downside moves, they might feel really bad, really ugly, but nothing's real until we get past earnings. Soda and mostly food is up. Yeah, that's it. Yeah, not to be in tech alone. I think that's totally fair. What's the background metal abrasion sound like? And oh, that could be like I'll just turn ducking on. It could be the mic. It's not the mic. It's like the interface of the mic to the computer. I'm having issues with it lately. Anyways, this is where we are. So it can go down a bit, but I think it's not a reason to panic. I think that you can day trade this short if that actually does happen. But I wouldn't sell anything is for sure my sentiment here. Not permanently. Diamonds, I think, are pretty solid so far. They haven't broken down. We'll see how this goes. And then so we'll get into your request. So AMD was another request. Look, AMD has to report. I think what you can do in this scenario is literally what I was saying. Like, so we haven't even broken down on AMD right here. I will say that the volume on AMD in this range, I don't use the volume that most people use. I don't think it's helpful. I think it's harmful. I only use this one. This is extremely, extremely thin volume. That's all I can tell you. That's pretty clear. From a trading perspective, what that sets up as is like, okay, 330 from this extreme low to this extreme high is about 50% retracement. That's going to be a typical retracement. If you actually get all the way back down to 270, 250, that's technically a standard retracement. This is going to represent about 61.8%. Let me just do the values. Yeah, 61.8% retracement, somewhere into 65. Honestly, just saying, that's where I have support based on volume. That's what I'm talking about. We've run that fast, guys. There is a very clear total gap right here from that last earnings. So on the right-hand side of my screen, where this volume disappears, that's what I'm talking about. This doesn't have to be filled. This is more a function of an earnings report over here, where like the stock moves so fast. It's just very thin. It's just very thin. See where the volume just disappears. Sometimes when you have moments like that, the market tends to gravitate back towards them. We haven't broken down into that yet, but this isn't becoming a, what was it, 2 trillion? This really made a good old college try to be $1 trillion company. It's stalling out. It's tried 1, 2, 3, 4, 5, 6, 7 times. I think honestly, the play here is to sell some upside calls around that $1 trillion market cap level, which is like 600 with time, right? And if you can sell it and get enough premium collected on AMD, that protects this kind of a downside, meaning $140 or more. If you can collect $140 or more to sell a $600 call, I would do it if I don't want to sell AMD. So that's what I would say on this one. But yeah, this is clear. This one's not going higher unless you're over all-time highs. Otherwise, this is backing up. And you have a little bit, I mean, think about this. Like you have a little bit of support at 450 compared to where real support is. It's like a nothing burger. Like this whole area is very, very thin support. So just be very, very cautious there. Yeah, we don't know. This is the thing. I don't know. I've seen this in the market before where, and I was talking to my buddy this morning. I was like, I've seen this before. And I really remember because I have scar tissue from this as an investor. Like, you know, you look across the market, specifically in July, and it's like, dude, why are they using the best stocks in the market as their like personal ATMs? And I remember like distinctly like going out and, all right, let me buy a little bit here. And then it would dip again. And I'd be like, okay, let me buy a little bit here, right? And then the price would go up and I'd be like, oh, I got it. And I would almost like think I'm in the clear. So I'd buy a little bit more, right? And then what would happen was that it would just, and I'd be like, what just happened? And so I'd buy a little bit more, right? And then I'd kind of, I'd be looking backwards and I'd be like, oh yeah, okay, I've got a good level of support. And guess what happens? The stock does start to go up. So I buy a little bit more again, right? And then it goes up. It keeps going up. And then I'm like, cool, I'm in the clear. I'm finally close to break even on those last rounds that I bought. And then you know what happens? Then it did this. And I'm like, what? And it got worse. And I'm like, do I buy again? And I'm like, And I kind of feel like this is where things start to look, it's like, dude, that whole process, what should have happened was me, what should I have not done? Should have not done this, or I should have been able to sell some things, right? Like knowing, hey, yeah, we can get a bounce. It's what it is. Honestly, not hedging, but having a lot of cash to deploy at any given time is from a long-term perspective is the best way to go about it. So if you're fully allocated now, my guy, Mr. Limey, if you're fully allocated now, that's the most risky place to be. That's an irresponsible place to be, is what I will say. But what should have happened was me just being patient, go a month or so, maybe multiple months, and then like not even like I'll have my levels, right? Like if this is your level, not even wait for that, but or not just jump in when I get to my level. Like, yeah, sure. I'm telling you, 330 is a level. It's a level where you can do this, you can enter, and then it could do this on you very easily. that's the kind of level that is. It's either do that in very like continue to dollar cost average forever with no intention of ever selling. That would have been fine. But in order to do that, you couldn't have sized too heavily. And so I think the moral of that story is you can do that, but it's all about how much money you allocate towards it. And at the end of the day, if it's a very small percentage of money, it's totally fine. But if it's a large chunk of your money, it's not fine, and it makes you make bad decisions later on. I buy falling knives all the time, June. Yeah, but it's to hold, right? I think that's my point, right? It can't be all of your money at once, and it has to be in that kind of like never sell bucket. And the only way you can be in that realm is if you actually have conviction on the actual company. Anyways, but this is AMD. I think that overhead resistance is between 600 to 650. Support very near term is around 450, but that's weak support. Real support is close to that sub 300 on the chart. I'm just gonna think that we'll check through this. All right, Hoodie. So Hoodie's got earnings coming. You know what's the Robinhood earnings should be good fundamentally. Whether or not the stock gets rewarded for that, like I said before, I honestly have no idea. One thing when we outlined this last move is that this was what we call like a bearish retracement. And my sentiment here was like, look, yeah, we can bounce into the 120s. That's exactly what happened. But and if we were up over this 125, then we're really cooking, right? Like cooking with gas. But to be cautious at that point, that we weren't out of the weeds yet. Here now, we're not out of the weeds yet. And coming back to retest this prior breakout level in general, I think this sets up for probably closer to like an 85, maybe even 75 support again, all the way back, essentially. It's very possible, but it's not until we get through this 125 level that this is going to be that, $200+ stock. In the meantime, this is more chop. That ends up being like a technical bounce into earnings ahead of the report. The good news is that it's come back a little bit here. The exciting stuff for me on Hoodie is like, did you guys see CME, I guess, is releasing equity options? Dude, Hood is going to make so much money on that. It's going to be gross. I just, brokerages are going to clean house to me on that. So that's a future thing. I don't think that event contracts are going to help them at all right now. I think that's a sell the news event. In terms of Robinhood, I'll just be very clear on that. World Cup is over. March Madness is over. NFL is over. You have nothing to look forward to. So any revenue that they did have on that, don't expect the market to give them any forward-looking credit until Q4. It's over. But in the meantime, yeah, this can come back in, but I think this remains a long. You just don't want to see it losing this general support area. So I think the first level is about 85. right in here. But the real level is back towards that 75, and we'll see how this goes from here. The lab of rockets. No, I like I was saying earlier, I think you would think that the headlines were kind of bullish, and I think they were, but it was not able to get through that $75 level. So from here, I would say, again, volume analysis right here, you're not breaking out, right? And so my sentiment in general was that we could have a moment like this over here. And so I think that if I were to, I don't think there's a function. No, there used to be I don't think it's this, right? No, it's not that ghost feed. There used to be a tool that I could use that was like, copy this exact pattern, a fractal. I don't think they have fractals anymore in TradingView. Just like, so not used, not helpful. It was funny though. Where's the fractal? Where the fractal bros? Request it back on was it this bar pattern? Yeah, I found it. If I were to take that, there's my fractal. I found it. And I overlay it on Rocket Lab. I think that we could actually see exactly this. So right here, right now, I don't know that it's a big deal. I don't expect this one to really break out either, but this scenario playing out in the future, I can easily see, which means that this 50 something level is actually like 47, technically still in play. So keep an eye out for that. I think if you see it sub 60, it's probably a decent buy. And I honestly, over the next few months, if I see, I expect this. And so this is kind of like an accumulation phase on Rocket Lab. You just don't want to see it below that like 55 level, not in strength and not being able to recover. That would be my one concern right there. Poop Momo X. Hey, I got the fractal. I can't believe I found that tool. I thought that tool was gone for so long. But yeah, I used to love playing with this tool. There it is. I would literally expect this. So if your trade doesn't accommodate for that, I think you need to rethink your strategy, because it's just not going upside right now. Corning, GLW. Dude, this is one where like, all right, I will say it is very expensive. We have earnings coming in. You're at the 200-day simple. This is this unfortunately is the definition of a blow off top, right? So meaning you have this consolidation yet again, you have a massive extension. And at this point right here, what you really wanted to see was it could retest, that's fine. And you would want to see some kind of continuation to the upside. In fact, we did not see that. What we did, see was a full-blown breakdown back into this general consolidation. And it's at these lower highs here where you're like, all right, things are getting kind of ugly. Today, really retesting like the bottom of this, not today, last week, this prior breakdown level. And right here is where, all right, this trade, from a trading perspective, it's going down lower. Once you couldn't really get through this 165 area, that's where it needed to hold. That's this entire consolidation range over here. All of this, that, and the other, that is a, what we call like a second mouse trade, back down to the 200-day, which is into the 130s. So that's where we are right now on Le Corning. I think this one, I don't know what the historical multiple is on something like this. Hopefully it's not another .com era situation, but I guess maybe you could assume it's something like that. Who knows? But net, we're actually working on two things right now. So this is your .com kind of breakout from the retest of this entire range here is 113.41. I'm actually working off that level right now. This breakdown at 162 to me is like, that's no good. This has to get over 185s in order to be even somewhat kind of legit right now. Near term support is going to be around 113 is going to be my guess. I'm going to turn on that volume profile and see where this lands from a weekly perspective. See if I have any confluence there. That is the 200-day simple. Yeah, it's very small. So I have it at 132. This is showing me more confluence in this area, but I have a small blip on the radar, which is realistically going to come from this prior consolidation. So this is as we stand right now, actually on support, right? So literally right here, right now, 132 is exactly that support. This is that prior breakout here that went through and ultimately, watch this, ultimately retraced from right here. So it's coming back into this general area, and it's already hit that lower support bound of this prior consolidation. If this whole thing loses, look, this goes down to 120s, high 120s. If that whole thing gets lost, then we are looking at a sub $100 stock, probably 70s, something like that, which is a lot from here. Otherwise, what has to happen is this starts to retrace the move. And again, if this does go down or go back up, that's okay. Don't think that we're out of the weeds yet. I already gave you the areas that we broke down from. Just know that we have to actually get back up through those areas. So that's a long ways away from there. I'll say that the major resistance is really far away from here. So this is high areas resistance. This is medium-term support, or this is long-term support now in this area. And this range is big. That range is big. So I think this trade kind of goes on the back burner for a while. Expect massive consolidation and a lot of whipsaw price action that, again, you need to give something like this a long time to digest. And I think we have to wait for the rest of the entire cohort of earnings to get through. So this could easily double in the near term, like literally talking, if it got back to 225, that's not a double. Okay, it's 65% upside. That's what it is. It's also like 50% downside. So yeah, this one's going to be a wild ride. Very hard to decipher this guy, but it is at near-term support. I don't think it's going down further from here today, but post earnings, it's possible. Fundamentally, I'll say, look, this is a important company. Nvidia gives them like $500 million to, speed up their factories so that they don't run out of supply. When the biggest name in AI gives you $500 million to make sure that you can supply their build out, you're not just like, you're a dependency. And I think that's an important note here. That said, it was such a consensus dependency, it became very expensive. And this right here, right now, is exactly what we're seeing. So is there execution risk? For sure, right? Is it expensive? For sure. Is it deservedly expensive? For sure. And will it probably work out long term? I think so. But from that perspective, we have to see, can they continue to pull triggers or pull levers and things like that. Amkor. Somebody asked for Amkor. All right, let me get to this one. 2000 all-time high. This is another one where, like, dude, I don't even remember. It was this day right here where a headline comes out. What was the headline? 30 side upside for Amkor. Oh, Nvidia, $1.5 billion Nvidia packaging deal. Look, I think this stuff is legit. Like, this is exactly like us doing what the headline about China was. Like, of course, China's doing the same thing. We're doing that. Amkor spinning up, I think, is the Arizona factory. So these guys are more expensive than their historical levels for sure. the last earnings is way over here. This is now your resistance, the $70 kind of area. Technically, it's a pullback, but we have earnings literally today, tonight. Downside here is about 45, which is the prior support from right over here. That's what we're looking at, right? So downside support 45, upside resistance 77 to 85, right in this area. This would be constructive. Anything over 85, this is likely going to be a good win. But earnings tonight, you got to see. I don't think it's going to move that much overnight. I guess it's possible, but I wouldn't say probable on this one. Yeah, I think this is the point, right? Like, same concerns as us. We're doing. By the way, don't think that we're not doing the same thing. Like, yeah, human nature. This whole bottleneck situation, human nature will not let bottlenecks stay bottlenecks forever. Like, that's just not how the real world works. We're gonna find a way around it. Enter Qualcomm and things like that. That's why things are doing what they're doing. We got a Euro super chat. I didn't notice. So INOD. Look, I don't like this. Innodata. I think my stream might have glitched. All right, we're back. So Innodata, here's the thing. If you guys don't know, Innodata CEO on the last conference call, look at this. Basically said they're shifting their company entirely. They have traction on whatever their AI product was. I actually caught the conference call somehow. And I didn't believe him. I could be wrong, but just my gut was, yeah, no, this doesn't sound right. That was my gut. This is now going to be a TBD kind of situation. 91 is just the basic dead cat bounce. Very careful there. So from here, you can check the lows of 55. What I will say is that this probably, get this, 47 is the price that this stock was trading before they announced what they announced. If it turns out that all the good news that they were excited about last quarter is not a thing, I don't think that 47 holds on this stock. I think instantly you go to 47, but the chart as a whole, and my caution here was like, okay, this is one of those crazy companies that if you pull this back to a monthly chart, it has like a wild history, but I can't really say whether or not this is the real thing. I don't have any history with this company. I only ran across them by running into that one earnings call. But I would say this sub $40 is your basic support here. My gut, my caution is that I don't know the CEO's pedigree or history. So if they're promotional, that doesn't bode well. If they're not promotional historically and they don't sell shares into this news, cool. But yeah, I don't know them from Adam, so I can't have an opinion on that. Maybe he's like a stand-up dude, and I'm just like, being dumb right now. It was just, I don't know whether or not this is a good shot here, possibly, because this could be $90 come earnings. But between now and then, I think this is already on trajectory to kind of slowly trend down back towards that 47 area and give it all back. That's what's happening. OUST, very same story, except, so this is my caution here. I don't think these are quality. I think these are poor quality. I think these are the kind of companies that could be meme stocks. These are like exactly the companies that could never come back from this and maybe never deserved to be where they are. These are the ones I would be very concerned about potentially dropping 90% from here. I'll just say that. And maybe it's because I don't know, but it's not even about what they're doing from a technology perspective. It has nothing to do with that. It has everything to do with like the company's track record, pedigree, and historical, like, what's the word? Track record of projecting out an outcome, seeing it through, driving an initiative to completion, and actually benefiting the stockholders from that initiative, wherever they come from. I don't know if they have a tendency to dilute share count into good news, you lose credibility. And so when we're talking about long-term investing, and people are talking about investing in the leadership team and the people, that's what they're talking about. And that I don't know. So from that, but I just don't know them, which means that, like, well, I don't know you. So so until noted otherwise, I think that's the biggest thing. So August and Mark, I'm sorry, I don't know. But that's what this is going to come down to, regardless of technology. That said, my point of saying all of that with a caveat is that this does not look great. This looks like $20, generally speaking. I don't think that these matter about deals. It has to stop, like, right here from a technical perspective. This is decidedly the low end of support. So anything, no, I mean, look, your resistance is 40. It's not that a chart like this is broken. I'm just going to go out on a limb and say this is a short. So no, even if this gets back up to 40, that's resistance. It has to be like over 50 to be up here, and in between here and there, like, this is dangerous. I don't really like it. We'll just say that. Yeah, otherwise 2026, maybe. Yeah, just wait, is what this chart is saying. It's not over 40. At minimum, it has to be over 40. Sorry, dude. So resistance decidedly here and here. So, and look, that's a lot of work that this has to get through. So you're looking at trades like this, but at any point in time, if it doesn't get through, then you should expect this also, right? And if it doesn't, you got to be cautious. You lost momentum. Nebius, I think that's. Oh, we got another dude with the super chat. Jeez, you guys are. AUR. Why do I know this ticker? Aurora Innovations. Long term, that looks interesting. Value to truck deploys second. Driver to Dallas sled. This is shipping. Shipping's actually kind of interesting. Is this shipping? Oh God, you almost got me. That's super. This is self-drive. This is FSD for trucking. I'm speechless right now. This is what, anybody remember Nicola? This was like the big play. It's back, baby. It's back. Look, it's very exciting technology, for sure. But until FSD is like approved across the world. It's very early. Well, it's not early. I would say like it's gonna be. This is an idea company. I don't think earnings should move this at all. What should move this somehow? No, yeah, earnings doesn't historically move this. Is like investor days and things like that. Traction on deals, orders. They're definitely not going to be a profitable company. I highly doubt that. If they are, that's insane. This is you don't look at this without a 20-year view. I don't think you could look at a company like this without having a 20-year time horizon. So with that in mind, it looks heavy. With that in mind, it looks very heavy. So this $8 is your historical resistance. And this area here is actually your support around 250. So yeah, that, well, 950 is resistance. And I think you're coming off of this type of base, which I'm getting some measurements here. Yeah, so 650. Yeah, okay. So I got a clean read at this point. 655 has to get over. This is interestingly technical. This is a weekly chart. If it's over 650, cool. Then you have a runway into the 950s, but that's your resistance, this whole general area. 1050 to 950, and then you have another rung of resistance close to 12. So if this becomes a momentum play, cool. You have two kind of like areas potentially in the 15s, but that's quite a ways out. I think the company would have to prove it otherwise. Otherwise, you're looking at this support into the mid threes. But if you lose that, it's like 250 support down here in this area. And as long as it's below 650, I would stay 655. It's more cautious than optimistic. But you got one trade here that could take 9 months to play out potentially on this setup. T1 Energy. The super chats are coming in hot, guys. I don't know what to say. Yeah, again, another more speculative one. I don't think you need to go out on a limb here and do anything. And if you own companies like this, just know they're risky. And like this is a new company, right? And it comes down to, you got to look into the management team. It becomes an investment in the management. And I don't know specifically here. I'm not talking about the investors, and I'm not talking about if you like them or whatever. I'm talking about their actual track record. Can they set goals and actually achieve those goals and have it benefit the shareholders and the company equally? Or do they have a history of setting lofty goals and not attaining them, constantly pushing out deadlines or diluting into good news? Those are things to watch out for. That said, below 450, this is a 3.25 with real support down towards 250 on this guy. This one I wouldn't really touch until it's back over sixes, like in this route, which also oddly enough that's like resistance, so it's kind of in no man's land. It's a toughie. I would say long term, you gotta be long term on these kind of stocks. So resistance is actually in this area right up here, and you have two kind of like, this can get to 579, but it's not out of the weeds yet. Then if it does get over 580, cool, it's to 7.5 maybe, potentially up into the mid 8s, but that's where resistance is. So for those reasons, why I was saying like I would be okay taking this kind of a trade from like 580 to 850, but we're not there yet. and you're off support. So I wouldn't want to jump ahead of this one unless it's just like a very short-term blip from here to 590. But I don't see that as a good risk reward from a trading perspective. I don't see it. I don't think that's going to qualify for a systematic. Where's the long entry? Hello, long. It's like 2.5. Like that's your trade. But you don't even really trigger till it's. I would do this. Like if it's over 5, then I put a stop at 485 with a target somewhere around 550, 50 cents. Then I can get a good risk reward. Otherwise, this area is like no trade zone on T1. Okay, Nebius. They're waiting for it. Earnings coming this week. Oh man, Wednesday, is that right? Nebius. It's a toughie. I mean, not that tough, but here's your last breakout area. So from 141 and the consolidation down to 68. This right here, that is the consolidation that this has broken out of. With that in mind, it became a like a momentum trade where you go level to level. We have this, and we had targets up to 280. Once you start losing levels below 250, then you go to 214. You lose 214, then you go to 170s, right? You lose 170s, I'm just telling you now, it's 141. You lose 141, just telling you now, it's like 110, 105. That's where this is. So good news, this is not below 170 anymore. So as long as this near-term area here can hold, this should get back up to 214. But that is decidedly resistance. Remember that volume profile thing? This whole thing on the side, this is the volume profile. And so right now, when I'm saying 214, that's resistance up there that it's got to get through. And in the meantime, we're looking at coming off of this support and potentially creating a little bit higher support in here. And if we can, we get this trade. Got to be very careful that you don't get that scenario. But that's where a lot of the charts are. So I would just be very cautious here. If you want to take a snipe, this is more of a sell put for a very short-term scenario of like what we call this an inverted head and shoulders. But again, that takes me to that same 215 level being what we would call this the neckline. And that's the best that you can assume on this in this scenario, and you still need to be cautious of that. So dead cat bounces into the 220s for sure. It's not out of the weeds until this well over 230. In the meantime, I think what I say it was 114, 140, 141, which retests the top of that breakout level here into 141. If it can't get over that, it is close to 100, which again, wild, right? Wild, because that's really far away from where we are. Zeta, my God. CC's covered calls at 25, paying $40, expiration next week. I think you're okay. It's a guess. I don't like. It depends on if your cover calls are if Zeta is an investment, cool. Like make it an investment and not something that you want to generate income on. I don't like to do that on my investments unless it's a defensive posture. I think $40 cover call is probably going to be. I don't know how you got that. Sounds like a lot for a $25 cover call. You would have to, you can keep those on, but you want to close those cover calls if it's over 25. Take an L, whatever. That's resistance up here. So in the meantime, this can actually make it to there. That's upside resistance. Downside support, you actually just came off of it. So that's the good news. And I think this is probably sideways. I think you're okay, but earnings is the 4th. If your cover calls are expiring next week, that means they expire on the 7th, which means that the only reason they're paying so much is because you're getting the extra earnings oomph. And I will tell you that there's a very real risk that they do very good and the stock ends up being $30 on earnings. And if this is an investment, you're in a rock and a hard place. And for those reasons, I don't like to do those on my investments. If it's a trade, the right thing to do is to let those shares get called away, call it a win, because the agreement that you have is to sell 100 shares of Zeta for every one cover call that you collected at a strike price of at a price of $25. And you get paid a $40 premium to do that. So you would effectively have an exit at $25.40. And if you don't want to sell if you don't want to sell Zeta at $25.40 come next week, don't do it. That's a bad trade in that situation. If you do, it's a great trade and you will have won. But I think that's exactly how you have to look at it. If you're looking at it in any other way, you're doing it wrong. But technically, there you go, resistance at 23. But I would not hold that through earnings. You never know. Tesla, not on an investment. On a trade, yeah, for sure. Can I do Tesla? Five LBS is what Graham put. £5, my dude. We can do Tesla. You live in Europe. So my question is, do you actually see a lot of what's the Chinese car maker? Like Neos and do you see more Teslas or something else where you live? Real question. I don't know, because I don't live in Germany or Germany, Britain, England. I don't live in Europe. Stop it. Jason said Tesla's dead money. I mean, Tesla can go lower, but I think, depending on your time horizon, I think that's what matters, right? This is a long-term monthly chart. We're realistically coming in to retest the next pretty important level. On Tassie, the crew knows, anybody that's followed me for a while, to me, 415 was the level that she really needed to get through in order to say this is good. What I will tell you right now is that you're looking at a very long-term head and shoulders pattern with the neckline coming in hot around 300. So that said, if this pattern actually happens and triggers, which it has not, that takes us to closer to 225s. And that pattern would then be essentially completed like this. But we're not there yet. Right now, we're really retesting the top of that. And so that comes in right around 300. And I'll just turn my things back on. See that volume profile one more time? It's down here where your support is. So what I'm talking about is actually coming in to retest all of this type support. So that's the concern on Tesla. If it's an investment, it's an investment. I don't think that matter for you. And you've probably been in this for a very long time and you're just, doing what you're doing. But near term, that puts Tesla support. If this current support, which it's on, it's literally on, I would call this support down to 290 something. It's on support, right at 300. If it loses 300, the next downside is 240. That really probably should happen in that case. And then if it goes even further, yeah, it could be pretty deep, sub 200, because this whole area, 180s, you would essentially end up testing the bottom of this support area, which very weird. Just where we are. So Tessie here now, I think this is going to be near-term resist or support as we come into it. But actually take these little areas right here. So back in 2025, it was trying to get out of this zone right in here. And that was your resistance. It's 291 is what that is. That acted like support a couple times. So when I was saying between 300 and 290, this general area is what I would call support. So that is between 300 and 291, if you will. It's coming in pretty hot to it. So if it could pull a rocket lab and do a thing like this, who knows? But yeah, sub 300, if you have the right time horizon, cool. This is going to be expensive on all fundamental metrics, no matter how you slice it. Yeah, I think we'll see. BYD, that was the one. BYD is everywhere in check. Everywhere. I think that's one concern. Yeah, we know they're definitely cheaper. And in Austria, man, way more BYD. Dude, you guys, the comments are not super bullish here. Okay. And Neos are real. You know, there's a headquarter for Neo out in San Jose. I've never actually been. It's weird to have an office in the US when you cannot sell your cars in the US, right? Very weird to me. So yeah. 415. Yep, there you go. Best decision. Yeah, I think back in the day I sold those January $400 calls for sure. I did the same thing on Hood, like way back when. Is it garbage? I don't know. Is it bearish right now? Let's see. Nvidia, probably bearish-ish. So clearly support around the 180s right now. This is your, I mean, if you can't tell, this area right here is about 180s. I think anything under 200 is probably fine. The weird part about Nvidia to me is that, look, this has not, in fact, gotten the benefit of the doubt. So what I just did is I measured one extension. So from this extreme high to this extreme low, this is 2025 earnings, and this is between March and May. I think this becomes that general range, this being 212 to 161. Take a look at this for a second. On that range, this is in fact our resistance area. Pivot was resistance here, actually became support once here, and a little bit of a multifaceted pivot all in this area. So for those reasons, I'm looking at this general area. I actually think that down towards this 188, it could stop anywhere here. We're actually on the very top end of support for Nvidia. And usually you want to be long Nvidia as the mega cap or as the hyperscalers are reporting. So we're about to have Amazon and Meta report and Microsoft. So those are the hyperscalers coming. If you don't remember, Apple's doing good from a chart perspective right now, but don't forget, Apple actually said that they're looking to get into, like, there's a new CEO in town. Is not the old Apple. I think that Apple could make some shifts. So I would be a little bit more cautious than optimistic on Apple in terms of CapEx. Like, they could come out and say, we're going to spend a lot and we're actually going to make a push into AI. So any logic, which is kind of what they said they're going to do, by the way, any logic of, oh, Apple doesn't have any AI built into it, it's becoming a little, when the safety stocks become a little extra safety, that's when I would actually be more concerned than not. CoreWeave, dude. What? This is support. Wow. I didn't think it would be like, it gets deeper and deeper. Oh my God. So this is pretty far away from most of your SMAs. You're actually now deep into support. I would, if you didn't buy it already at 70, I think this is okay. But between 69 and 64, that is in fact your support. Here's my caution. 69 is that IPO high. So that actually is taking this stock all the way back to the IPO days. If it loses that, the high trade on the actual first day is 41. I don't like saying, so this is at support right here, right now. If you don't own it, it's worth a shot. If it goes lower, I would not take another shot until it's got a 4 handle on it. That's what I'm going to say. So that is 34% downside for a risk of a double upside. So upside, this in short order, this can actually get back up to 126. So that's like a 80% upside. So you're risking 30% downside to make 80% upside. I actually think that maths out. So here's your downside. That very nearly, that math actually kind of works. Actually. So, well, yeah, that sounds like a big downside possible. Risk to reward here is fair. Risk to reward here is fair. I can't knock it. Chart looks like doo-doo caca. It is decidedly at support, but your risk is worth the reward. I'm actually saying that across the board for a lot of things. Don't hate me if it goes down. I'm not saying it's going to go up. I'm saying that it's at support, and I'm saying decidedly that the risk to reward metric makes sense here, knowing that the downside is actually like 35% lower because the upside justifiable. I'm just going to take a look at an oscillator really quick. So the last time the stock was yeah, I don't know. Last time the stock was at this level, it was easy. What's the word here? Where your oscillators and your price action doesn't match. Divergence. Jeez. Easy divergence. I do not have the same divergence here now at all. Yeah. In fact, this is higher. This is definitely not saying divergence here. Even at this level here, the last time CoreWeave was over here. When I'm talking about divergence, by the way, guys, is kind of important. You probably cannot see this on my chart. Let me see if I can make this a little bit better for you. Yeah. Okay, so there's these little squiggly lines over here, and I really can't tweak with it that much more. But this is the support area of 65 the CoreWeave was on. The last time it was over here, that's where I'm using a MACD histogram. It doesn't matter what you're using. You could be, it's an oscillator, is an oscillator. You could be using RSI, but I'm also on a daily time frame. What I'll say here is that this one was, in fact, the divergence call, where the low was over here, and then you have equal lows at price, but the oscillators here show a different story where you had an equal low on price, but you have a higher low from an oscillator perspective. That's a trigger that you're going to get an oversold bounce. Similarly here, you know, you have a general low on your oscillator here, and your price is here towards the lows. It's this one here where price actually makes a new low, yet at the same time, the oscillator itself makes a higher low here. That's divergence. So higher low on the oscillator, lower low on the chart, equal low on the chart, higher low on the oscillator. I don't have that over here. I have a very different setup. So the chart does not look like this is going to hold. But it will tell us soon. And it's probably going to be a retest of the biggest thing, like I was trying to describe earlier, is that like on the chart here, I have low, low. If I were just to take this, I mean, low, low. Yeah, I don't know. It's really close. I think this is chopping. And then if we test it again post earnings and the oscillator is higher, say like here, that's going to be the bigger long, which might be over 80, I would say. That's what that looks like. I don't hate it. Oh my God. With the super chats. My guy. CEVA. J Duff. Earnings coming in hot. New low. This is likely going to test the lows, at least from a technical perspective. This is the August is earnings. So I know I'm just going to do a quick measurement here, just FYI. So this is a measurement from this low to this extreme high. Literally today, 34.31. If it doesn't, this is it. So this is your near-term support from the last earnings. This is 50%. Right here. So this is normal. The way this works, these retracements are, if it cannot hold 34.31, it is going to 30. That's what's going to happen. If it can hold 34 for the foreseeable future, that's what you need to see. That is and will be support. Let's say if it goes to 30, what happens is that you have to define your resistance, which is now 43, 40 to 43. If this is the low, it's still around 42. So this area here is going to be your resistance near term. That was using a daily chart. Longer term, I think that area that it broke out of, or that it's testing right now, this $50, was a big deal. There were a couple of things that we're looking at here. One, from this, peak 2021 to this low here, 15 in the teens, that $50 again is kind of like where that resistance area shows up. It's actually all the way up to 60. So if it was over, if CEVA was trading over 60, this was going to look real nice. It didn't get there quite yet. This area gives you a little bit more confidence for everything that I'm talking about. So this 35-ish note being that first resistance level, I think this is where you want to see it hold, but just know if it doesn't, it actually would get back to 30 from a support perspective. If I can get volume pro, this is not a well-known ticker, but earnings are coming. I think that you just take that with the grain of salt. I kind of like things like this. Like if I could sell some $30 puts, I'm kind of about that in this scenario. I'm pushing the wrong button. It must be. Let me go back to a daily here. Where's my volume profile? There it is. Yeah. This is saying closer to 20. I don't really want to see that full-blown situation. So yeah, I would like to see it hold like right around here. If not, I know that I'm probably going to come back into 30s. And if it can't hold 30s, then it is 20s from a volume perspective. So TBD on this. I think this is the broad. This is actually the edge. So it's a little bit different, but we'll see. We'll see where this one goes. This is more like thematic. Palantir, PLTR. The difference between like a company like CEVA or like Oust or whatever is that, like, dude, that company's been around for forever. And it's not like the executives are like pumping stock or anything. So, but they're not like overly, bullish either, which is the good part. Here's your pivot, 125 on Le Palantir. What I could say about this is that, again, you kind of have to go back to all-time support, all-time lows on some of these charts because they have broken initial structure. And when you do that, watch this. When you do that, measuring from all-time low to all-time high, this is how you get 106. Is that wild? Kind of wild. I mean, that's like to the penny. That's crazy. I don't think I realized it was like that. That is how you get to 106. Near term, we actually have an even more interesting to me kind of setup where, we're fighting a lot of your SMAs. It's actually holding pretty closely. And you also have a little bit of a, what we call broadening formation. So you have a high here, you actually have a higher high, and you have a higher high. At the same time, you have a low here, you have a lower low, and you have another lower low. So conceptually, we have both higher highs and higher lows. So, where's the trend, right? Well, it's not there. What this is called, it's called price discovery. It's called a broadening formation. So you actually get to do both. And when you do both, you'll see, look, this is how that works. And this is legitimate price discovery. So when you're in a price discovery mode like this, the trades honestly are beyond the boundaries of this. And then you have the center line. The center line being, I'm going to take a tool called fixed range profile, volume profile, and I'm just going to highlight that consolidation area, and I'm going to grab what we call like a point of control. And now I'm just looking at the volume for this one area. And this center point, 134, see if I can extend it right. Yep. So I can extend that. How come that didn't extend right? Whatever. This is the volume profile. So that gives me pretty clean resistance right around 135. Off of these lower lows, the crazy part about these kind of setups is that, yes, you can take them here or realistically right there. You see that, but then realistically right here, and you expect to trade into this volume profile. If it can get over that, you actually can see one more higher high, which is over 165. But you need to be very cautious there, because at that point in time, if you get this, you expect this. Not joking. So until I see a change of character, meaning like until I see this actually just kind of like rounding out and say, if this really gets through, back to my daily, I'll show you the profile. That resistance is actually way up here. So imagine for a second, and I'll just measure this. Okay. From here to here, technically, the bears should live here. Good bull knows where the bears live. This is where the bears live, 168 to 172. Now, zoom out for a second. I have my volume profile here. That gives me actually the same kind of clean trading range from here to here. See these low volume pockets, just like we were talking about? That's what we're looking at. And if I take all of that away, no simple moving averages, no none of that, and I just focus on this broadening formation, my caution here is that, and why I'm saying like this looks interesting. If it does this and we get exactly to there, and then you get this is how that happens before it turns around and does that again. It's very possible, and it's not as uncommon as you would actually think. This is a very real thing. From here into earnings, this should actually hold. What you don't want to do is you don't want to let this turn into just a progressive downward channel, which it's not out of yet. It's at the upper bound of its current downward channel. So still in a downtrend. Unfortunately, it's a very interesting spot from a technical perspective. It's not an easy spot to read. So if you're not used to how these kind of things work, that's why I spent a little bit more time explaining this type of setup. But there you have it. This is a trading location, tradable location. Support, if 106 breaks, support is 75. And maybe Robinhood and Palantir trade at the same dollar amount yet again. Who knows? But until then, 170s is resistance. And it's on its way to resistance right now. So hard call. I think this looks great for selling puts and calls at the same time. I'm going to have to take off in a minute here. Actually, I should leave right now. So this will be the last one. APLD at support. This is a bad one. You got earnings. Did earnings just finish? You got earnings tonight, so you can't really do anything. It's a watch. You're on support here already. This guy is $20 at the low end of support, but it is currently at 25. So it's on support right now, 24.95. Let me get this exacting. 25.84. This is, one more time, from inception low, all-time low, to all-time high. Get this, is literally at 50% right now. If this fails tonight on earnings, it's $18, just between 18 and 19, which will be support then. And then you want to see how does this act. If it can't get over 19, if it can't get back over 20, it goes in the trash heap for a while until it's back over 20. Intel, sad to say, $120 stock goes to 145, then goes to 75. That is likely the track that this is on. So I'd wait for 70s. And in the meantime, this can stall out for a while. So that's going to be a long time to recover. I like Intel a lot. I really like Intel if China invades or blocks off the Strait of Taiwan. Actually, I really like Global Foundries and Intel in those instances, but it's gotta show me more. aaoi, and then I'm going to call it, is on support. I think this is actually where I would say if it doesn't get its butt in gear right now, exit stage left. I actually took this for a trade from a equity perspective trade, literally below 100 down to, I think 93 was my stop. You're very close to your stop. My stop is right here. Yeah, I got a quick bounce early, but honestly, I would just close this right now. I would, if you caught this low, like our crew did, anywhere in here, you're now negative, right? And I think understand that a lot of the market is like this. If it doesn't get back over 100 tomorrow, you probably just exit stage left, call it a quick loss, and check back later. And there's very little, what would I say, leakage in that instance. It's worth the shot, but if it doesn't immediately recover leakage from your P&L or your bank account. Like very little in that instance. If it doesn't recover instantly, yeah, I don't wait around for this guy, because it's going to be $50 and then some if it doesn't turn around quickly. So just like the rest, I'll just do this here from this, like, let's go inception low. I think that's all-time low. So all-time high. $90 here, which is what it's on. It has to hold that. 83, it seems, is like the low. And you're coming off of another one of these that went crazy for a time. Is that $1 low? Yeah, it's got to get over 103. This makes a lot of sense. So like 103, you're on support here. First level support. Next, I guess this could go down to 82s, but it's not back in an uptrend unless this is over 103. So today's high is not a good look. Doesn't mean you throw it away, but you don't let this go too far from you. Otherwise, it becomes a short. So you're going to retest. You are retesting this area over here right now. If I throw on a profile, there it is, right? So on the right-hand side of my screen, here's your volume profile, and that big low volume pocket that starts around 80, just under $80. So, I mean, if you want to give it some room, have at it. But that said, the truth of this situation is that unless this is holding over 103 from here, it's not, and ultimately 120, it's not actually done going down. It's still having to battle with this upper tier of resistance right over 103. So this guy right in here. So that's resistance, short-term resistance. If you can get through that, a name like aaoi can actually gap through that. That's going to probably align with, I'm going to use orange, your 20-day simple, and your 50-day simple would be over here, which would set up a trade from, like, again, back over 100 into that 150. That's a great trade. And I actually took that trade. I still have a little position on it, but I'm very close to just cutting it and say, you know what? If I still like it later, it'll be there for me later, and I don't need to risk it. But that's where I'm at. All right, guys, I appreciate your patience. Sorry for the shenanigans on the is Connie back? Connie's out right now, I think. Graham is in. Showing up. Unless Connie's back and I missed it. Oh, before I go, you guys, we dropped this in the description, but check this out. If you go to papergains.com, first of all, join the Discord if you can. If you're not in the Discord, I don't know what you're doing. You can chat it up. It's free. Come in. There's a newsletter. That's auto pop. Kind of threw me off. You can subscribe to the newsletter. But the coolest thing that just happened is that on the top right of this box, there's a challenge portfolio. This is free. Get this. I believe we're starting the first ever monthly classic. And this is now open. Just go to papergains.com. It'll redirect you to schoolofgains.com, and then click on the portfolio thing. The link to this directly will be in the description of the video. This is free. It's for fun. The monthly August classic begins in 6 days, 18 hours. All you do is you kind of build your portfolio. Your stake this round is $100,000. Get this. Enter the competition. You must allocate $100,000 or you not be entered. And literally, you just start picking stocks. I think, you know, if you want to pick AOI, right, add it, right? And it defaults to 20%. If I want to go Qualcomm, add it. I want to go risky, so let's go GLW, add it, right? What else do we want? Nebius. We like Nebius. Oh, you know what? We want to double dip because they liked CoreWeave. Cool. We want to add it. So these are all, it defaults to 25%. I can make this 10. I can make this 5. I can make this 20, 25. And then, I don't know, is that 10? 30,000 left to allocate? Whatever. You can add, you can change your allocation. And I believe there is a, oh, there it is. 4 rebalances. So weekly, you can rebalance weekly. Pretty cool. If you want to know how it works, pick your stocks, allocate every dollar, submit before the lock time, and that's it. So pretty cool. Yeah. Current contest, Nvidia Nut in the lead. Rach won the founders round, the first ever weekly. She's currently actually number 5. Lance, Josh, Dix. Look at this, guys. And it'll look like this. So you can view it, see what they're holding. You can just hop on the site anytime too if you want to see what are traders trading. It's cool. Here's Graham. Look, Mr. Hollis is in the house. Rach is here. Brando. A lot of the crew. But oh, even Connie's in. Look at that. So that's where we're at. We're testing it. I think this is, yeah, it is 100, unless you want it to be like, it's funny money. It's paper gains. You like how we did that? But it's cool. Yeah. So this is the first, it'll be I think it's a 4 week or a full month long pick. You can go long, you can go short, you can do whatever. Oh, these guys are already locked in. Look at this. They're already in. Out of control. They're ready to roll. No, they can't, because they can't copy trade because you won't see. That's the thing. You can't. I mean, you could copy trade in real life. I don't think anybody cares. And if you do that, you know, that's on you. But once you lock it, nobody can see whatever. Like until the competition actually starts, you won't know what everybody has. Oh, there you go. Yeah, Rach. We just showed that, right? So like the next one for the classic, these guys already locked their plays in. So they've already submitted their entries and their oh, I'm not sharing. I just went. These guys already submitted their entries, but you can't see, right? It's locked in, locked in, locked in. We don't know what they're doing until it goes live. We don't have a Discord membership, Frankie. We only have a school. But yeah, if it goes well enough, I don't see why we wouldn't do prizes. I mean, as long as like it's more reasonable. Like we're not trying to make any money on this. This is for fun, but who knows? Maybe we give away stuff anyways because we just like to spend money for the sake of spending money, huh? I've been known to do that from time to time also. Don't tell wifey. Oh, yeah. No, I mean, like, yeah, like we can see. But anyways, all right, guys, it's been real. It's been fun. I appreciate all your support. I will see you guys tomorrow, I believe. We have I think we're going to do a technical Tuesday with Amit. I know it's a busy day for earnings. Look, it's a busy week. Net, it can get crazy out there. I think, you know, it's not over till it's over. And the issue is that it's not possible to be over for many weeks, at least until we get through earnings. And who knows what happens after that. So we shall see. But until then, guys, trade safe. And I'll see you on the next one. Adios. Peace.